Hello traders, Gary Wagner here, just about 10:30 in Honolulu, 3:30 in New York. It is Monday, November 23rd, 2015, and this is the Daily Report for Gold and Silver. We do have the precious metals markets across the board trading lower, down strongly. Gold off about $10 as we can currently see at 1067, 65.85. It's running in the high 67s, the low 66.58. So we're trading just off the lows with the high 78.26. That is a lot of pressure in the market. Of course, we do have Thanksgiving holiday in the mainland coming up, and so because of that, we're going to experience lighter volume day in, day out. Silver also trading lower, off about 10 cents on the day, trading at 14.08. We have been looking for silver to trade to about 14 for quite some time, but take a look at the low on today, 13.92. You can really see that when we pull up our daily chart right here and look at today's candle. This extreme low down here is what we're talking about. So we've seen a trade to a low of 13.92, the high 14.20, and of course we're trading roughly at 14.07, 14.08, currently off, as I said, about 10 cents on the day. So traders, in my opinion, this break is pretty significant because it, one, puts us very, very near the most recent lows. We're just a couple of dollars off of those lows. You can see that on this daily chart. The low really being this candle right here, this small star that trades at around 63, 64, right in that area as a low. We're trading at 67, so we're just off of that low. And realize that these lows that we're looking at are record lows because we've really got to go back historically in time to actually find a place in which this market is traded to this point. In fact, we've really got to look at our weekly charts. So traders, I've done just that. I have converted our daily back to a weekly. And on that weekly, I've put in a horizontal line. Now, that horizontal line is coming in based upon these most recent lows here. The reason for doing that is so that we can carry over this most recent low and look for historical perspectives of what we're looking at, and you can see that right here. We've got this low that comes in right here. This happened beginning of 2010. I believe 1035 or so was the price structure there. We also have this low right in here, which kind of matches up, and that's in that same area, that 1030 area, because my sense is that this market will probably trade to about 1039 with some real opportunity to touch upon 1,000. You see that 1,000, we're drawing it across right here, but that 1,000 really matches up to a period in time in which the market was rising, and as it rose, it found multiple times in which it found that particular price point to be a real area of resistance. And as you know, one man's ceiling is another man's floor, and so resistance and support become the same. A break below this resistance area, and we've got to start looking at lower areas. But as I said, my anticipated move in gold right now is for the market to go lower, and it is for the market to trade to about 1030, between 1,000 and 1039, barring something that will change the environment out there. Of course, right now, the belief is that rates will rise come December 17th, December 16th, when the final FOMC meeting gets underway. It's about an 80% probability, according to most analysts, that we will see that. So based upon that, we could see either further decline, although I believe that much of this lower pricing that we're seeing now is baking in that interest rate hike. So traders, considering that we have gold trading off roughly 1%, just shy of 1% on the day, if we look at some of the other precious metals markets, you can see that out of all of them, palladium is taking the greatest hit in the market today, trading off almost $20 on the day. More importantly, trading off over 3.5%, and that's based upon a market that's traded to a low recently of about 527. So we could easily see palladium move to these lower points based upon these lows that we saw back on the 19th of this month. Do want to take a look at silver, though, because silver's been acting most interestingly, especially with this most recent low that we've seen, in which the market has definitively broken below 14, this low at 13.92. The real question is whether or not we'll see silver find any kind of support at $14. So traders, to get some sort of handle on silver's current pricing, obviously we are looking at a weekly chart to look at some historical data. And oddly enough, the last time we saw silver trade to 14 or below is this one spike here. I remember it quite well. It was almost to the date a year ago because it transpired on the Monday following Thanksgiving weekend. We had very, very late volume and the market slid. Now, the market was trading at what, $21 an ounce, and slid all the way down to roughly 14, even 13.99, I believe, was low when we hit it right here, and then had the ability to move back up to 18. But 18 was to be short-lived because we've seen this slow, methodical move back down to these lower points. Now, if we look at that particular price point and then go back in time, we really don't get any kind of data that supports this particular area until we get to about 2006, 2007, 2008, because at that point you had this being a very, very strong ceiling, $14 per ounce being a strong ceiling, in which we saw the marketplace attempt to break through that point on a number of occasions. Finally does break through that point again in about October, November of 2007, traded slightly below it before moving back up. And that became a pretty strong area until, of course, the market melted down again. And that happened, roughly July and August of 2008. That's right here. So in terms of historical precedents, we have seen silver trade at this price point before. And if it does go much lower than 14, the next real level that we have to look at is about 13.50 on the chart. So traders, there's absolutely no doubt we have tremendous pressure in the precious metals markets. One. Two, we also have this marketplace at this critical area once again, in which we take a look on our longer term charts. This, of course, being our 61% retracement level, and that is at around 1061. That's a price point that we have looked at for quite some time, and whether or not this market can hold this particular area is critical in terms of this long-term view, because as I said, a break below here, if it breaks into this $1,000 area, has really negated any kind of a bullish model that we've been looking at, as this being a, although extremely tough retracement, when we consider the move that it had just preceded, and not that much of a retracement at all. However, more importantly, we have to take a look at the fundamentals in this market. And the fundamentals in this market are not in the environment that they were when they first took off in 2006, 2007, 2008, especially 2009 and 10, in which we actually saw it break above 1,000, because that was the point in which quantitative easing began. The monetary policies had changed, and gold reacted to that. Now, the monetary policies have now changed again. We're looking at the potential for rate hikes. Quantitative easing has ended. And so because of that, the fact that we are back at a baseline area of roughly the same area in which we were at when quantitative easing began, it doesn't seem that highly improbable that we're going back to the area that quantitative easing was or the price that gold was at prior to where quantitative easing was at. We'll see how this market reacts. This is the kind of break that tells us to sell the market, not buy the market. However, going into Thanksgiving weekend, we realize that the volatility is going to be lighter. We certainly do want to be positioned prior to the release of minutes from the FOMC meeting next month, because the anticipation is that we will see a rate hike, and within that rate hike, we should see additional pressure in the precious metals complex. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for another daily update and review. Bye-bye.